Horizons ETFs Management is a financial services company and offers one of the largest suites of exchange-traded funds in Canada. Horizons ETFs has more than $10.2 billion of assets under management and 85 ETFs listed on major Canadian stock exchanges. The company is a member of the Midas Global Investments Group and trades on the Toronto Stock Exchange under the ticker HMMJ.
And I'm joined now by Steve Hawkins. He's the CEO of Horizons ETF. Steve, welcome back.
James, always great to be here.
Steve, you had some big news. Why don't we start there?
Yes, we went through our normal quarterly rebalance this past week, and because of the Farm Bill Act, we were able to add CBD to our portfolio now. So Charlotte's Web is probably the biggest name in the business in the U.S., and it is now a member of the HMMJ family.
Oh, that's very cool. So you're still not going to touch anything that's to do with THC?
In the U.S.
In the U.S.
That's correct, yes. I mean, we own lots of THC in Canada.
Right.
Even Colombia now, too. I mean,
really?
Pharmacello got added to the portfolio as well. I mean,
Chiron?
It's a Canadian-listed company,
yeah,
but its primary operations are in Colombia.
Oh, that's fascinating. So right now, the top holdings in your company are 48 North, Agriflora. Are these the top?
No, those are the new names.
Oh, these are the new additions, sorry.
The new names that just went in.
Right,
yes, yeah.
Okay. So Zenabis, Westleaf, ICC International Cannabis.
Yeah. And that's a different ICC than the ICC that was acquired by Aurora.
Yes, it is. Interesting. Heritage Cannabis, I'm a shareholder of that one. That's cool.
Yeah. Our big holdings are still the Canopies, Afrias, Auroras, Kronos, Tilrays.
Yeah.
Those make up the majority of our portfolio still.
Right. Very cool. So CBD then, what's your take on the long-term outlook for CBD?
I mean, it's very, very positive. And there's going to be, I think, Charlotte's Web, as an example, will probably pursue a major exchange listing, whether it be in Canada or NASDAQ or NYSE. I know the companies aren't allowed to talk about it during their sort of qualification period, and everybody's quiet and talking about it. So, but I think there's going to be a few companies like Charlotte's Web that are going to follow on behind that. Maybe they'll adjust their operations so that they're only producing hemp with very, very low THC or just CBD in it, like Charlotte's Web, and access to the banking sector, access to the capital markets is really, really good for any of these companies. Charlotte's Web has done very well in Canada as a U.S. sort of company operating or accessing the Canadian capital markets. Listed on the CSE, but we would see them graduating sometime soon from there.
Sure. It's interesting to me, correct me if I'm mistaken, but I seem to see an increased appetite for the more speculative in this new arrangement.
Well, you know what? I mean, the industry is growing right now, right? And what's really happened is we had so many of these companies like 48 North and Flower that have been on our radar for a very long time, but there's now their capital markets activity, the amount of trading in them, the nice run that we've had in marijuana stocks generally over the past 2 months has created larger market caps, has created more trading liquidity, which then allows us to apply our rules for the portfolio, for the index, and bring these new companies into the portfolio. So we added 9 new companies. We're up to 59 portfolio companies right now, so lots of activity.
So when you decide to add a company to the portfolio, do you actually approach the company and ask for a presentation or go visit them or go see their stuff, or is there some other process? Do you just do financials and analysis that way?
Well, we mostly do a qualitative overview of the company themselves.
Okay.
Most of these companies are already approaching us. They're saying, please, can we get in your index? Please, can we get in your fund? Because they want big institutional investors helping support their stock price and creating volume out there, right? And that's, as one of the largest holders of marijuana stocks in the world, that's a very easy thing for us to do. move. So most of these companies have approached us in some way, shape, or form. We do site visits, but we're not really kicking the tires on the companies themselves. We're primarily looking at them to ensure that their operations are entirely legal so that we can continue to meet our TSX listing requirements.
Okay, interesting. So let me ask you this. What is the most sort of junior company that you consider? Like in our
pre-revenue,
for example?
Like on the private side or on the public side?
On the public side. I didn't realize you had privates in there as well.
We do not. We do not. So, I mean, some of the smallest, like 48 North is a very small company on a relative basis. But,
sure.
But we have...
but growing like stink.
But growing very well right now. You know, I mean, our ETF is the best performing ETF in Canada year to date right now. We're up 60% right now, wow. Right? So that's a nice little return for an investment in a broad-based security where you're giving access to the entire space rather than to taking the risk of one individual name. So,
right.
You know, it's hard to say. I mean, we have, you know, I would say the top 6 companies make up a really significant majority of the portfolio, right? That's like a 40% concentration between the top 6 companies, which still does include like Scott's Miracle-Gro and GW Pharma in there.
Right. Okay, so this is just going to add more torque to the
This
portfolio.
Absolutely adds a little bit more torque to it.
Wow.
I mean, again, hence our return of being up 60% this year.
Right. Yeah. An ETF with high torque. It's a high torque. You should change the name of the high torque ETF. No, I love it. Okay, so the CBD space gives you a broader canvas from which to paint your portfolio. And Pharmacielo looks like you now can go into other countries in different parts of the world.
Yeah, as long as they're listing their securities in North America,
right.
then we have access to them through our portfolio. So our index is really focused on only securities listed on a North American stock exchange. So, you know, we had the original ICC that Aurora was, you know, they were listed in Canada on the Toronto Stock Exchange or the Venture Exchange anyway before Aurora, and so that provided us access to Uruguay, Pharmacielo now to Colombia, you know, CWEB now to the U.S. hemp market, which, you know, back to your original question, you know, we see that market only growing from here as well. I mean, their hemp CBD market in the U.S. is basically the same size as the entire cannabis, recreational and medical cannabis industry in Canada. So there's huge growth prospects for those really CBD-focused companies in the U.S.
I've seen a real uptick in the number of companies coming in my door that are just about the CBDs. And to the point where I'm thinking, wow, this space is going to get full real fast, because, I mean, there's like 10 companies a week coming through here that say we are going to be CBD leaders in the United States. So I wonder, from your perspective, how do you sort of mitigate against the risk of oversupply? Is it through picking quality names? Is it through picking jurisdictions? How do you do that?
Yeah, I mean, we're less discretionary when it comes to that perspective. You know, as long as the companies themselves are operating in a legal framework, and they've gotten to sufficient size from a market cap perspective and trading volume perspective to meet the minimum thresholds of our index and portfolio, we're going to buy them regardless. Okay. How much we own of them is sort of discretionary based on the size and the growth of the company.
Right.
So again, we don't want to paint a qualitative overview of one company over another company, and you know, it's typical equity investing. You know, over the long term, the traditional active equity investor cannot beat the S&P 500 or the TSE 660. You know, so you need to be invested in a passive benchmark for our purposes, rather than picking the one individual name over the other name.
Mm-hmm. Wow, how much is the entire net asset value of the HMMJ portfolio now?
It's just over $1 billion. So
really?
$1.05 billion. Yeah.
Wow.
Yeah. So we've been playing with the $1 billion for a while, back and forth, but we've had a nice little run, and we're bringing new investors in almost every single day. So.
And do you participate in private placements that companies are doing, or do you accumulate out of the market?
We generally only accumulate in the marketplace. I mean, there are some bought deals of public companies that we will participate in from time to time, and Canopy Rivers is an example. We participated, thankfully, to Canopy Growth. They allowed us to participate in that offering, and so we bought a nice sizable chunk of Canopy Rivers
wow.
in the secondary market there.
Very cool. Well, the performance is outstanding, obviously, and it's like I just love it every time I talk to you. It's like this thing just takes another turn and gets just a little bit more attractive, at least from where I sit. I've always been sort of skeptical of the passive ETF approach. I'm always like chasing the high torque, but now you've got the torque too. I'm thinking, well, maybe I should start time for ETFs.
You can spend all of your time doing the research on any one of the individual companies you want, and you might be able to match our returns.
Right.
But buy the ETF as a nice little piece of the pie, and just watch it run.
Yeah.
So.
Great. Okay, well, Steve, we're going to leave it there again for now. Awesome to see you again. Thanks very much for the update. We'll come back to you soon enough.
Great. Thanks for having me, Jess.
Thank you.